I'm going to tell you, if you have $1 million, you got $1 million you put into a stock portfolio, and you got $1 million and you buy real estate. Let's say you can buy $5 million worth of real estate with $1 million. I'll go up against anybody.
100%.
The real estate portfolio will outperform any stock portfolio. 90% of millionaires that became millionaires did so because of real estate. Well, you got to watch this segment. Hey everyone, welcome to What's Happening in Real Estate This Week. I've got Conrad Zerini here, REMAX, Escarpment REMAX, Niagara, Brian Hogman with, not REMAX, but Mission 35 Mortgages. He does it better than the banks, as you see it on the signs. And myself, Rob Golfi with REMAX, the Golfi Team. Two things we're going to talk about today is what happened to all the real estate investors and what happened and the Bank of Canada's growing list of worries. So I want to talk about what happened with the real estate investors. It says that only 1.7% of this is a survey of 1,986 respondents chose real estate as the best investment, while 61% favored a diversified portfolio of stocks and bonds, and 30% opted for an all-stock portfolio. This shift away from real estate is notable given its previous popularity in investment. Bank of Canada data shows investors made up 30% of home purchases early last year. However, the real estate market in cities like Vancouver and Toronto is weakening with year-over-year price declines in detached homes, 3.2%, semi-detached homes, 2%, townhomes, 5.6%, condos 2.4. Despite these drops, Toronto average resale home prices remain just under 1.2 million, underscoring the affordability crisis. So now this is not really investors.
Okay.
I mean, you know.
Okay, wait. Let's call a spade a spade. Rob Carrick. It's the Rob Carrick survey, and if you guys follow Rob Carrick like I do on the Globe and Mail,
you knew that
he's anti-real estate. He's always been anti-real estate. There's never a positive story about real estate in the last 10 years. So this is from his email list, his people that are on his email list, right?
Which is bullshit.
Which is because he hates everybody. He hates realtors, mortgage brokers, real estate, everybody.
So this guy is like CNN with the with the Republicans in the U.S.
You nailed it. Absolutely.
So why do they have this guy? This guy is not giving proper opinions, proper information.
He's terrible. He thinks. Look, I think he likes it that because real estate he doesn't have control over in his mind. Like he thinks, you pick stocks and that kind of thing is more scientific. Where real estate just kind of went up on its own and you didn't have to be strategic. Right. So that's his play on it. But yeah, no, it's not.
Well, I don't think so. Like I actually had a stock portfolio. I'd never invested in the stock market, but I thought as soon as COVID started, going back, as soon as it started, March of 2020, when that was announced.
March 2020, middle of March. Yeah.
I was like, you know what? I was terrified, but I thought this is probably the best time to invest, right? Because when there's, I always subscribe to, when people are fearful, be greedy kind of thing. That's Warren Buffett's line. And I'll tell you, I did a comparison of my stocks versus real estate. And this would be a good one. Rob Carrick didn't call me on this survey. I'll tell you that much. But the stock portfolio did well. I had a 15% return on my stock portfolio. And it's random. I just contacted a planner and put it in because I don't know stocks at all. 15% year over year, which was pretty good. But my real estate portfolio outperformed that. It still outperformed it because you take into consideration the principal pay down. Where I think investors are saying it's not good right now is because it performed really, really well because of mortgage rates. Is it still going to perform that well at a higher interest rate? Maybe not. But over the past 5 years, it definitely outperformed the stock portfolio.
I'm going to tell you, if you have $1 million, you got $1 million you put into a stock portfolio, and you got $1 million and you buy real estate. Let's say you can buy $5 million worth of real estate with $1 million. I'll go up against anybody.
100%.
The real estate portfolio will outperform any stock portfolio. 90% of millionaires that became millionaires did so because of real estate. And so this Carrick guy, does he know that or what? Like, what's the matter with him?
Well,
No,
you know what?
he's
The
just
real
like
estate investment
anti-realistic.
part is going to get a lot better too, because there was new rules. And Conrad, you might have seen this, that CMHC, like the 10-year bond rate, which CMHC bases all of its multifamily funding on right now, is dropping like a rock. Like it's like at 4.3% to get a 5-year, 10-year. So these people out there right now that are doing the 10, 20, 30, 50, 100 unit buildings, they're getting phenomenal financing, and they just loosened up on their financing requirements, where you used to not be able to pay yourself back, right? Kind of like that first strategy. CMHC just said you could take that money out and do whatever you want with it. Pay yourself back, shareholder loan, pay out other things. So what do you think about that, Cotton? Do you think that's going to spur
that's a game changer? Because before you could only take the money out and put it to another project, right? That's the
correct.
Yes, right, correct.
Oh, is that right? Oh,
yeah. So which is fine if you're in the business, that made sense. But now you can buy a piece of land, or you can do other things. You have some more flexibility, and you can take your money out, which a lot of these projects are cash heavy, right? The investor cash heavy, right? So it is a game changer. It makes things that much more easier to do. And then, at the end of the day, sometimes people might just want to end with that project, right? Right?
Yeah.
I know.
Well, then that money can go back out into the economy too, right? Because if you can take that money out, well, now I can spend it. So
I think that's going to be a real plus for the whole industry. Yeah.
Question. Okay, we know the flippers aren't flipping as much right now.
No.
Okay, and that's what cleaned up Hamilton in the last 10 years. Okay, Hamilton downtown, like the North End, got cleaned up with all the flippers and all the new people moving into the city. That's one thing. So we know the flippers, they're kind of sitting on the sidelines and waiting. So those investors are just kind of waiting to see if interest rates. But even with the interest rates coming down, house prices, I mean, it's still hard to make. It's still hard to do a flip like the way they are. Like I don't know. Like you really got to be good at finding a good flip now.
Yeah, and we've seen some, especially when it comes to estates. These homes are, and I've seen the deals. We've seen some of the people telling me that they said we'll take it with all the furniture, and the estate was like happy as you can imagine, because it's one less thing to deal with. So there are some opportunities there. We've seen more of that. Look, don't worry about it. Kids, we'll take care of everything. And that's worth some money. And, you get that down on the price, and they get people to to clear it out and do the thing. Yeah. So people still like a finished place, though. I got to say, they still like one mortgage payment. Yeah. And nobody wants to do construction anymore, right? And if you've got a good system, you can still do it. Yeah.
I see that with our first-time buyers. And you probably see this, Rob, with the first-time buyers now. They want like the unicorn. They want the nice house. They want it beautiful. They don't want to do the work. They don't want to move into something where we'll build some sweat equity. They're like, I want it perfect. The first-time buyers.
Yeah, they just want to move in. They don't want to have to go through 4 to 6 months of renovations and living in dust and all that kind of stuff. I get it. Yeah.
Yep.
100%. What about the investors that buy condos? Are they sitting on the sidelines because a lot of them got hurt when the closings started happening in like in the last year and a half? So are those guys ever going to come back? Yeah. Like, are you going to see them buying 5, 6 at a time like they did before?
It's I think maybe townhouses, stuff on the ground, townhouse sites. I think there's still pretty good buys there, even like back to backs. But the high rise, many companies suspended their projects. A lot of projects are suspended. And Rob, we haven't seen all of it yet either, because you got to remember, if they bought in 2022. They're not going to take possession probably until 2025. So there's a lot of these coming. I think what's going to happen to them is they're going to realize, and if you survey those people that bought those condos, they never were going to close on them. They were always going to assign them. Never in a million
That's right.
years.
That's right. And now they're scared
they can't
shit.
Close, and that's really putting downward pressure on those products.
So
absolutely.
I get a phone call from a guy. He was an investor. He goes, Rob, I can't close on this house, and he's got to close within 3 weeks. And I go, how much money did you put down? He goes, $70,000. And I go, would you pay for it? $730,000. I go, you know what? They're worth under $7 million. I go, I go, even listing at $699. I go, I don't even know if you're going to sell it. And I said to him, you better go to the builder, make a deal with him. You're going to lose money. You may even lose the whole 70 grand. And I said, I don't know if the builder will take it because but you need to make a decision. And I says, I would start with the builder. Will he take it over from you? And I don't know, but there's got to be a lot of people in that situation.
Oh, yeah. And Rob, you're giving great advice. And what we're seeing is that they're saying, sure, you're going to lose a deposit. The builder's checking your credit. And if your credit's really, really good, they're saying you got to top it up with another 30 or 40 to get out of the deal. If your credit's not so good, they realize they can't get blood out of a stone, just walk away. So yeah, you've got to go and negotiate. And if you've got really good credit, they're going to hold on to you until you make a deal with them, because they've got lawyers and they're going to sue you for damages. All of them. All the major too.
I think it's good to do the math on it. We had one where it was a townhouse in Brantford. Purchase price was $700,000, appraised at $670,000. So it was 30 grand. I think this is
the same complex that I'm talking about.
Yeah,
buddy, it's in Brantford. This complex.
Yeah,
there's the closings coming up.
And the rental income is going to be $2,700 or $26. And do we have the same client here? And then the mortgage, you're bleeding $2,000 a month. That's $24,000 over the course of the year. So to your point, when do you want to stop the bleeding? Do you want to sell now, or do you want to lose another $24,000?
I said to the guy, do you want a long, painful death, or do you just want to die right now?
Yeah.
I said, you know what I mean? It's just, I told him, I said, you're going to have to, I said, to assign assignments now are not that easy. People are like, you know what? If it's an assignment, they want 150, 200 grand off. You know what I mean?
Oh, yeah.
But I told him, I said, you got to go to the builder and make a deal with him. I go, you're going to lose your 70 grand. I go, because your house is not worth that, what you paid for, regardless. I go, look, there's 4 of them for sale right now. And some of them are bigger than yours and some of them are smaller, and they're not selling. They're sitting, and now they got them up for rent, and they're not even renting because they're trying to get too much money for rent.
I think the buyers have the opportunity.
How long do you think it'll take to recoup that then? So that buyer that says I'm going to hold on, I'm going to weather the storm. Do I keep it for a year, 2 years, 3 years? What's
2 years? 2 years. 2
years?
Yeah. If he hangs on to 2 years, he may recoup. He'll break even in 3 to 5 years. Within 5 years, he'll be back on top. But but he's just got to suffer it. He's just, he's going to get, he'll have a good tax write-off on his losses.
Yeah, that's true. Yeah. Very true.
He'll have a good tax write-off, but I don't know. It's just, I know the investors are not out there. They're hanging on and they're watching, and some of them got hurt pretty bad. That just reminded me of
what I heard my wife say sometimes when she wants to buy something. She says, "It's a write-off. It's a write-off."
That's that Seinfeld.
Yeah, it's a write-off.
And Jerry Seinfeld goes, "Do you know what a write-off is?"
Work on the strategy for a second, okay?
That's it. Girl math. That's
it. It's a write-off. It's fine.
That's girl math.
Oh yeah. So we got a couple of minutes left. The Bank of Canada's growing list of worries: economic risk, population growth, interest rate cuts, household financial behavior, uncertainty, volatility. What are they worried about? Dropping the interest rate too fast? What's their problem?
Yeah, that they have to come back and two sessions later and bring it up. It's the problem is that this stuff just look how long it took for this to grind to a halt. Now you got to turn this thing back around. It's like moving a big ship. So but you know what? The inflation's been pretty good. I heard that. The July cut might not come, but there's been some good inflation numbers for Canada. So you might see September and another one in November, but there's definitely 3 cuts in Canada. There's without a doubt. But they just like to throw that worry out there so everybody will temper themselves and not go crazy in spending money.
Yeah. I think you know what? Yeah. What they did, the quarter point, it hasn't really changed anything. It hasn't done anything.
No, and most people don't think it's enough, right?
It isn't. It isn't enough. It isn't enough. Yeah. It's you know what? Yeah, okay, big deal. It's not going to change my life. I think once we start seeing another quarter, maybe another quarter, another half, or something like that, then we're going to start seeing change. But that's what they want to do. They want to do it little bits and bites, like little tiny steps. They don't want to, stir the market up too much. Otherwise, it just fucking
dangle this. We could raise it in a little while. Dangle it in front of us, right?
Yeah, that's
well, I think that's the worry, right? Because
the way to go. Long-term
if they
rates
do
is the
too
way
much
to go.
too quick, then they want to, and they're saying they're going to spur the housing market back. And I think, a quarter point each meeting would be a pretty reasonable way to do it. You do a quarter in July, you do a quarter in September. It's coming down slow. But because if you wait too long and all of a sudden do a half point drop, well, that might have a bigger significance in the marketplace.
But Brian, I did the calculation. A family that makes $100,000, the quarter point was only added $7,000 of more mortgage, right? So 7,000, you do 3 drops, crudely $21,000 extra in buying power. Even that, this is really a mindset, and how
100%
there. Yeah, it's a
100%.
mindset, really.
I think so too. Yeah. It's not really the math, but it's the feeling about it, right? Canadians feel like if you see more money in your pocket, you feel more rich, you're more likely to spend more money. And the same thing will happen to those people sitting on the sidelines. They're just going to feel like, ooh, this is the good time now, but it's really not the difference. So
that's it. Yeah. Well, guys, listen, I appreciate your time and thank you so much for the insight, and we'll catch you next week. Thank you.
Excellent.
Thanks, Rob.
Thanks, Rob.
See you guys.